Alrighty traders, George here, and time for a look at the trade of the week. There certainly are quite a few to choose from, but what I want to do is focus on one from earlier in the week on gold. And what I'll do for the explanation of that trade is I'm actually going to revert to an earlier video from our client training this morning. So this is a section of that video from the training that I ran this morning, and that'll explain the trade, and then I'll come back at you with some more information after that. So let's check out how I spelled this out for you guys in training this morning. So what was support now is a zone to look to for anticipated resistance. We drive up, here's directional movement after directional movement, contraction, expansion, we go SOS, turning point, we go black tip. We were overbought, and that lower high right there is the bearish divergence. This is textbook, right? And one of the best sell signals to look for. Here we come up and we can look to the left and say, okay, this was a key support area, anticipated resistance, question mark, let's build a case. Overbought, bearish divergence, SOS turning point, black tip. You could even give this a nod as a pattern style double top with some symmetry there, and then here's the rollover. I like to look to the DSR levels, speaking of the DSRs being rectangles and not something that's more organic that has these nebulous boundaries. It's a rectangle, so we've got a clear horizontal line on the top and the bottom of that area. So this is a good one to look at. Price moving just one tick lower than this level here to get short. So you can be on alert that this is setting up and say, hey, here's that level. If they break back below here, I'll get in. As it turns out, the black tip took it through that level. And if you're waiting for the black tip and not going in earlier, then you'd have to get in about there. And that thing presses all the way down to this DSR, but look at the impulse that comes after that. Nice directional and time qualified nicely as well. We get in at the end of that black tip candle, press to the bottom of this DSR level here. It's almost $11 price action. Amazing, right? So the DSR levels, they come off a higher period value. So there's a great look at that particular sell setup in gold. Really hit it out of the park earlier in the week, but let's not walk away from it quite yet. Let's go for a couple more laps around the track here, and I'll show you more of the exact same setup right out of the DSR trade directory. So remember, these are all set with a drive to new structure lows. We look for the outside return to come back up to a DSR level, and then we reject that level with the strength of signal of being overbought, often with bearish divergence, and then either a cluster, a pattern, or a combination thereof at that location to build that strength of signal to go short. On this particular example, it went $3.30 in favor. Okay, real nice trade. And remember, when these things are triggered, the real goal is to go back to where it came from. In this example here, the MFE to that point was $3.30. It actually got some good overshoot there, driving to new structure lows. Yet another example, we drive to new structure lows. Outside return brings us back up to that DSR level. We go overbought at that location. We put in a 2-bar cluster. We break below that swing low to get short. We expect to fill to the other side, come all the way back down to those new structure lows. Almost got there by a few ticks. That went $2.60 in favor there. Both of those trades coming from gold this week. Another example. What's it set up by? A drive to new structure lows. What do we look for? Outside return to come back to that DSR level. Then what are we looking for? We're looking to be overbought. We're looking for an end of move. The black tip happens to be a little bit higher into structure beyond the DSR. And as I mentioned, this is what set the whole thing up in training this morning, is a break below that DSR for that strength of signal to follow through to be short, and from that point on, this goes 18 ticks in favor. This was in oil, that's $180. Actually a good punch through on that one as well. How about another example? What's it set up by? A drive to new structure lows. We make an outside return, we come back to a DSR level, we put in a black tip as well as a pattern there. We break below that structure low of the pattern, right below my cursor here, and then we expect to go all the way back down to where we came from. That happens to be 37 ticks in oil. That's $370 per contract. You can see what happened. We made an absolute clean bounce off of that DSR once we got there. Should we let up? I don't think so. How about a new structure low, outside return, coming up to a DSR? We're overbought at that point. We sell off there. We go 18 ticks in favor. $180 in oil. We come back up to that level, set the whole thing up again. We're overbought at that level with a cluster. We break down and ultimately drive another 18 ticks in favor. Now this one happened to work a little bit against after triggering the short. It went 10 ticks against the entry. Maximum risk there, only 10 ticks before it moved to target. How about a drive to new structure lows and outside return back up to a known DSR level? We put in a pattern with a black tip. We break down below the swing low of that pattern. The MFE on this particular move over 11 points there in the NASDAQ. Great setup. How about one more? New structure lows, outside return. We come up to a DSR level. We're overbought. We've got a black tip. We break below the DSR level to get short. That moves almost 10 points in favor. Yet another example from the NASDAQ there. So one of my favorite sell signals on the DSR model, applicable to many markets on many different time frames and period values. The trade of the week, gold going $10.90, maximum favorable on that one. Use the link at the bottom of the video. For next week, hop in the room Tuesday to Thursday. You can watch me day trade these markets as well as do some big picture analysis. And until then, we'll see you back in the live room.